Hi there, I hope you're having a great day. Thank you for your interest in my Form 5471 and 8992 tutorial. I created this tutorial for people who own controlled foreign corporations, which are foreign corporations owned by more than 50% U.S. shareholders, to efficiently prepare the schedules of the Forms 5471 and 8992. Ever since the Tax Cuts and Jobs Act of 2017, the Form 5471 has become very complex and time-consuming. Due to the expanding number of schedules and calculations, it may take many hours and in some cases days to prepare Form 5471 and the associated Form 8992. I'm going to explain to you how to efficiently prepare a Form 5471 using my Excel template, which you can find on Etsy or on my website. The links are down in the description below. Now let's start at the Questionnaires and Instructions tab, where you'll find you can enter in the basic information of your controlled foreign corporation, which includes the name, the address, the date of incorporation, the country of incorporation, the functional currency, weighted average and year-end rates, and any U.S. INs or reference numbers. Next, there is a questionnaire to identify any reportable transactions during the year. The first question asks if the foreign corporation was newly formed or newly acquired during the year. This transaction usually has to be reported on Schedule O of the Form 5471. The second question asks if there is any disposition of foreign stock during the year. This may have to be reported on Schedule O as well. For questions 1 and 2, there needs to be a 10% or more change in ownership for Category 3 filing, which we'll go over later. Question 3, you need to identify if the foreign corporation was involved in a merger during the year. Again, any of these type of transactions need to be reported on Schedule O. For question 4, you need to disclose if any cash was transferred to the foreign corporation, and if yes, so you need to report this on Schedule O and on Form 926. Question 5, you need to disclose if the foreign corporation acquired any intangible assets during the year. Generally, the acquisition price of the intangibles needs to be amortized over a 15-year period under Section 197. Finally, number 6 of the questionnaire asks whether you've done business in any of the boycott countries, which are Iraq, Kuwait, Lebanon, Libya, Qatar, Saudi Arabia, Syria, United Arab Emirates, or Yemen. If so, you likely have to file a Form 5713, and there are stiff penalties with non-compliance. Now we're going to take a look at the instructions of my template to help gather the most important information to prepare a Form 5471. So for number 1, you should create an org chart that shows your ownership of every foreign entity. Here I have included a sample.org chart showing a hypothetical person owning 100% of a foreign corporation. It's very important to clearly understand who owns the foreign corporation because that can affect whether or not you have a Form 5471 filing at all. For question number 2, it's important to gather the final tax returns for your foreign entity. This can affect your ENP calculation on Schedule H, as well as your GILTI calculation on Schedule I-1. Also, you need to disclose the final income taxes paid on Schedule E. Okay, we're going to skip over numbers 3, 4, and 5 for now because that directly involves the filling out the Form 5471 and 8992. Moving to number 6, just know that the cash bank accounts of the foreign corporation are subject to the U.S. shareholders F-bar reporting. For number 7, the Schedule G questions involve a lot of the concepts and require knowledge of the international tax provisions of the Internal Revenue Code. So I would suggest, if you don't understand, these questions reach out to an international tax professional. For number 8, even though the template can calculate a basic Form 5471 and Form 8992, there are many nuances with every situation, so I would suggest that you reach out to an international tax professional to review your workbook. Now we're going to actually prepare the workbook starting with the trial balance. So I like to use trial balances to prepare the Schedule C and Schedule F, which are the income statement and balance sheets. If you don't know what a trial balance is, it's pretty much a financial statement in column format in which the assets and expenses are positive numbers and the liabilities, income, and equity are negative numbers. Your trial balance must sum to 0. Also, this needs to be in U.S. GAAP, which is short for U.S. Generally Accepted Accounting Principles. If you don't know if your financial statement is in US GAAP, I would suggest you contact a CPA that specializes in financial accounting. Next, you need to make book-to-tax adjustments to your GAAP accounts in column G. The most common book-to-tax adjustments are unrealized foreign exchange gains and losses, accrual accounts, depreciation, meals and entertainment, and research and development. Usually, temporary adjustments such as accrual accounts and depreciation are E&P adjustments. Permanent adjustments as well as temporary adjustments are used to calculate taxable income, which is your GILTI income, on Schedule I-1. Finally, you need to identify all the intercompany transactions in column I. One thing to note is that some income such as interest, dividends, and royalties are subject to the Subpart F rules, which require you to bifurcate the income between GILTI and Subpart F, which is done on Worksheet A and Schedule Q and is included in this workbook. Once you're done mapping the trial balance to the appropriate accounts, your Schedule C and F should populate. Let's move on to page 1 and Schedule A of the form. So page 1 is pretty straightforward. You have to put in the name of the filer, the address, tax year, and social security number or EIN of the filer. The most important part of page 1 is identifying the category filer of the U.S. person. If you have an org chart like the one provided in the Questions and Instructions tab, you're likely to be a Category 1A, 4, and 5A filer. To quickly go over what these category numbers mean, Category 1 is when you have a specified foreign corporation under Section 965. That means either you own a controlled foreign corporation or you are a U.S. corporation that owns 10% of a foreign corporation. Category 2 is when you are an officer or director of a foreign corporation in which there is a transaction where there's a 10 or more % change in ownership of the foreign corporation. Category 3 is if your ownership in the foreign corporation either increases or decreases by 10%, or if there's some sort of reorganization or merger involving the foreign corporation. Also, if you own at least 10% and your ownership goes below 10%, then you also have a Category 3 filing. If you own more than 50% of the foreign corporation, then you have a Category 4 filing. And finally, if you own at least 10% of the controlled foreign corporation directly, then you are considered a Category 5 filer. The tricky thing about figuring out what category filer you are involves the attribution rules, where shares of the foreign corporation are attributed to you from either a family member or another entity. This is why it's important to have an accurate organizational chart before you start preparing your Form 5471. I suggest you contact an experienced tax professional who understands the definition of each filing category. One last thing about the filing categories is that there are 1B, 1C, 5B, and C filers. These filing categories apply when you have something called downward attribution under Rev Proc 2019-40, where you have a foreign corporation that is brother-sister to another U.S. corp. So we won't go over that situation right now, but know that if you are a U.S. corporate filer, you must be aware if you have a foreign owner and if this foreign owner owns other foreign corporations. Now, let's quickly go over each schedule, starting with Schedule A. Schedule A is pretty straightforward. You have to show the class of stock you own and how many shares you have. So in this case, we have common shares, but if you had preferred shares, you would indicate that in column A. Moving on to Schedule B, in Part 1, you have to show the U.S. shareholders, which again are the 10% U.S. owners of the foreign corporation. In Part 2, you have to show all the direct owners of the foreign corporation, whether or not they are U.S. or foreign. In our example, because Joe Black is both a U.S. shareholder and a direct shareholder, he is listed in both Part 1 and Part 2. Next, we'll talk about Schedule C. The good thing about this template is that if you correctly fill out the trial balance and map your accounts to the correct description, the Schedule C and the Schedule F, which we'll talk about next, will be automatically populated. As a reviewer of thousands of forms, 71% over the years, one of the biggest red flags is the passive income on lines 4 through 9. If I see any amounts here, I would like to analyze if there are any exceptions to these amounts under the Subpart F income rules. If no exceptions exist, I would go directly to the Worksheet A after reviewing the Schedule C. Moving on to Schedule F, again, if you properly pick the right accounts on the trial balance, then Schedule F should populate automatically. So as I mentioned before, One thing you need to be aware of is if there is an amount over $10,000 in the cash account on line 1A, you may need to include this account in your F-bar reporting. Another thing that you should review is if the retained earnings is rolling from year to year on line 22. You want to take the prior year ending retained earnings and add on the current year net income, and if that number is close to the ending retained earnings on line 22, then there is a good likelihood that the financial statement is reliable. However, you must be aware that everything is in US dollars, and the trial balance should be filled out in functional currency. So any variances in rolling the retained earnings may be due to changes in foreign exchange rates. So you may want to include a retained earnings reconciliation somewhere in this sheet. For Schedule C and Schedule F, there are attachments that are required for the other income expenses and other assets and liabilities. I created this sheet that has an Excel macro that generates the other income and expenses and other assets and liabilities. If you don't like the debit and credit format generated by the trial balance, you can make the negative numbers positive. That should be a quick change. Moving on to Schedule G, there are many questions here that are pretty specific, such as whether or not you own a foreign partnership, foreign disregarded entity, or a foreign trust. Some of the questions involve some high-level international tax topics, such as FDII and Section 245A. If you're just an individual who owns a controlled foreign corporation in our example, most of these questions are not relevant and should be checked no. However, you should be aware of question 14, which asks if you answered yes to any of the subpart F exceptions in the instructions. In our example, subpart F income is the interest income on Schedule C. However, because it meets the de minimis exception, we can exclude that. This is why we answered yes to question 14 and included the code DM in the sample schedule. Next is the Schedule A. Usually this schedule is only filled out if you have subpart F income, have a Section 956 inclusion, or the foreign corporation makes a dividend. Also, there's some questions about extraordinary dispositions on line 8, but this is only relevant if you are a U.S. corporation that owns a foreign corporation. Moving on to Schedule E and E1, here you're going to put the income taxes paid by the foreign corporation. The columns are pretty straightforward, but one thing you need to be mindful of is column G, where the IRS has released regulations addressing the different income tax base of the foreign jurisdiction against the U.S., meaning there could be a difference between the amount that is taxable in the foreign country versus what is taxable under U.S. tax accounting principles. For example, some of the deductions in the foreign jurisdictions can be quite substantial compared to the same deduction under U.S. tax accounting, which causes the taxable income of the foreign jurisdiction to be much higher than the U.S., which results in a higher income tax liability. Here we have used the book income of the foreign corporation, but be aware that this needs to be the actual taxable income in the foreign jurisdiction. Moving on to Schedule H of the Form 5471, here you'll calculate the earnings and profits of the foreign corporation. Like I previously mentioned, earnings and profits start with the book income calculated under U.S. GAAP and then adjusted for E and P adjustments, which are generally the reversal of timing adjustments. In the example, we made an adjustment for unrealized foreign exchange gains. Using this workbook, you can identify the E and P adjustments in the Trial Balance tab by adding notes next to the appropriate accounts and filtering for the relevant adjustments. The next schedule is Schedule On-1, which calculates the relevant items for the calculation of GILTI at the U.S. shareholder level. If we had subpart F income, we would back that out on line 2B. Notice that I've included a calculation below that computes the effective tax rate of the tested income. In our example, the tax rate is much lower than 18.9%, and thus it is not eligible for the high tax exclusion. In the workbook, the income and expense items are pulling directly from the trial balance after all book to tax adjustments. But be aware that some book to tax adjustments are only relevant to GILTI income and not to E&Ps, such as the adjustment for interest under Section 163J in meals and entertainment. There are many nuances to the tested income calculation, so please contact me if you have any questions. Now let's talk about Schedule J. This is a very daunting schedule for many non-international tax professionals. However, I'll try to explain this in a very straightforward way. At a very high level, whenever you have an anti-deferral event such as subpart F or guilty income. This creates an account in your earnings and profits. This is called a previously taxed earnings and profits account. We use the acronym PTEP to describe each reclassed account. So, in our example, we start off with the current year earnings and profits on line 3, column A, which are the untaxed earnings and profits for the year. After we come up with the guilty inclusion on Form 8992, which we'll cover later, we need to reclass this earnings and profits to its appropriate PTEP account. Here we've reclassed the guilty amount, calculated from the Form 8992, converted it back to functional currency, and reclassed this amount to the appropriate PTEP account for guilty. Whenever there is a dividend, this amount will be removed from the PTEP account before the dividend is taken from untaxed earnings and profits. In other words, a dividend from a foreign corporation to its U.S. shareholder is not taxable to the extent there is a PTEP account. Once this PTEP account is exhausted, the dividend becomes taxable for federal income tax purposes. Moving on to Schedule M, you will have to identify all the intercompany transactions here. On the trial balance, there is a column where you can identify if the account is an intercompany account. Intercompany transactions are important to identify because of Subpart F income. You want to identify Subpart F income because it is taxed at a higher rate than guilty income. Related party sales outside the country of the foreign corporation may be considered Subpart F income. So here we have assumed that the sale back to the U.S. shareholder is not Subpart F income. There are many exceptions to Subpart F income on intercompany sales. For example, the foreign corporation could manufacture the products that it's selling, and thus that income is not Subpart F. Also, you must be aware of any intercompany receivables and loans held by the foreign corporation, and this is indicated on line 33 and 34. Intercompany loans and receivables may be considered a deemed dividend under Section 956. For Schedule O, if you have a transaction such as a purchase, formation, or reorganization, you have to fill out this information on Schedule O. The directors and officers of the foreign corporation need to fill out Part 1, which corresponds to a Category 2 filing. For Part 2, you have to describe the transaction, which can either be a taxable transaction, which is a purchase, or disposition, which is described in Section C and Section D. For Section E, if you had a non-taxable transaction, such as a Section 351 contribution or a Section 368 reorganization, you would describe the transaction in this section. Note there always needs to be a Schedule O with a Category 2 or 3 filing. There are many additional statements and forms required by the regulations, so I would suggest that you reach out to an international tax specialist to help you file Schedule O correctly. Moving on to Schedule P, this schedule is just a reflection of the PTEP accounts created on Schedule J. The only difference is that the PTEP accounts are shown in functional currency and USD. Whenever there is a dividend, you have to calculate the difference of the US dollar amount at the time of the inclusion versus the US dollar amount at the time of the dividend. This is called the 986 C gain or loss. Dividends are reported on line 8 of the schedule. One other thing you need to be aware of is that if you have a passive subpart F inclusion, such as interest, dividends, or royalties, you have to prepare a separate Schedule P for that passive income. And the category designation for general and passive income is indicated on line A on the top of the schedule. For Schedule Q, you have to separate your income and taxes into the appropriate income groups. In our example, all the income is in the tested income group on row 3. If you had subpart F income, you would have to carve out the income and expenses as well as income taxes related to subpart F income and put those amounts on row 1 or 2. Schedule R shows any cash and non-cash distribution from the foreign corporation. Here you have to show the amount and also the amount coming out of the earnings and profits of the foreign corporation. We have to fill out Worksheet A if we have potential subpart F income. Here we have included the hypothetical amounts of 200,000 Canadian dollars of interest income. The calculation will test whether the amount of subpart F income is less than 5% of total gross income of the foreign corporation. If it's under that threshold, then all the income is not subpart F income and is considered guilty income. If the amounts were over 5% of total gross income, then you would have a potential subpart F inclusion, and you would have to continue with the rows of the calculation until you get to the end. I have not completed a full example here because there are many steps that require judgment and analysis. So if you have subpart F income that is not below the 5% of gross income and the $1 million threshold, please reach out to an international tax professional. Moving on to Worksheet B, I mentioned before on Schedule M that if there are amounts on line 33 and 34, you have to find an exception to the deemed dividend under Section 956 and the regulations thereunder. If you cannot find an exception, such as the 30 or 60-day safe harbor rule, you have to go through the full calculation, which I've included here in the workbook. Any resulting Section 956 deemed dividend is included as a reclass on Schedule J, as well as PTEP account on Schedule J and Schedule P, similar to Subpart F. This is a very complicated worksheet with a lot of terminology, and I would reach out to an international tax professional if you are not comfortable with performing the calculation. Worksheet H-1 is the new worksheet for U.S. corporations to calculate their applicable financial statement income for the new corporate alternative minimum tax. I would not worry about this schedule if you're not a corporation with at least $1 billion book income. Finally, we move to the Form 8992 and the Form 8992 Schedule A. I would start with Schedule A and enter in the information from Schedule I-1 in the first row. Here you would indicate the tested income and the qualified business asset investment in US dollars. All this information is linked to the Form 8992 in this workbook. Your guilty amount is the tested income less 10% of your net deemed tangible income return. Your net deemed tangible income return is your qualified business asset investments times 10% less interest expense over interest income. The Form 8992 is straightforward. The hard part is gathering all these pieces of information from preparing the Form 5471 and Schedule I-1. One thing to note is the amount on Form 8992 worksheet, a column L, goes on Schedule J as a reclass from current year E and P, and also goes on Schedule P as a current year addition to your PTEP account in the guilty column. This is the end of the tutorial. If you need any help with using the template or any other questions on international tax compliance, please visit my website. The links are down in the description below. I look forward to working with you and appreciate your time and attention.